Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash-flowing properties in today's market. Here's your host, Gabe Peterson.
All right. Welcome back to another episode of the Real Estate Investing Club. It is a good day because we have the San Francisco Bay. Got a trio here. We got our duo. We got Lindsay, Lovell with us. As I said in the last couple of episodes, we are down here in Santa Rosa for a while, and Lindsay, turns out, is just south of us. So we're not too far from each other. Lindsay is a coach, speaker, and real estate investor. Over 18 months, she built a portfolio of 72 long-term, 12 short-term rentals. So she has plenty of experience, and I'm excited to get into this. A lot of short-term rentals, long-term rentals is where most people get started, and it is a great way to build a portfolio. So yeah, super stoked. Lindsay, thank you very much for hopping on the show.
Thanks, Gabe. Nice to have you in the Bay Area, and good to connect on a Friday morning. So thank you.
There you go. I told you before we got on here, we like to start with stories. So take us to the beginning of your story. How'd you get started in real estate?
Yeah, I'm going to take you way back. Young kid. I think I, bought hook, line, and sinker. That story that we all get told: if you get good grades, you work hard enough, you get that dream job out of college, you're going to have the American dream. You're going to be wealthy, and everything will be great. And I did that. I got straight A's, top of my class, graduating, got the dream consulting job out of college, and I was getting more and more in debt and continuing to run the rat race. Went back to get my MBA, thought, hey, maybe a career change, more in debt, slightly higher raise, still running the rat race. And I had this moment where I was looking at Wealthfront. For your listeners, it's a great tool that kind of helps you plan, looking at how much you're saving when you can retire and how long your retirement will last. And it was saying, if I continue to save every dollar, I can maybe retire at 63 and a half. And as long as I don't live a day past 96, I'll be good. And I was like, that sounds pretty miserable. Yeah. And there's got to be something different. And so I'd started doing a couple other side hustles, and then COVID hit. And I do pharmaceutical sales. So my job was calling on cancer centers. It came to screeching halt, but I was still getting a paycheck. And so my husband said, you should talk to Jason, who owns a couple hundred doors in Kansas City, Missouri. Jason sent me this spreadsheet that said COC, ROI, super intimidating, and pointed me in the direction of listening to podcasts like yours and Bigger Pockets and other things. And so I just started listening, caught the bug, found a great mentor through just the real estate community. That was May of 2020, and July of 2020, I bought my first house, long distance, sight unseen, single family in a small town in Missouri. Because we know here in the Bay Area, it's not going to happen yet. Sight unseen. And away I went, and fast forward to 12 months later, I had 32 doors and was financially independent, and almost 4 years now, loving it, have gone into, like you mentioned, all different areas, and just think it's absolutely something that's really wonderful for anybody interested.
Yeah. That is awesome. And I love that story because it goes to show that, it doesn't take that long in real estate to get to a point where you don't necessarily need to work. You're going to want to work because real estate's awesome, but you can do it a lot quicker than people think. People always think, I'm going to get in real estate, buy a door a year or something like that, and in 10 years I'll have enough and I won't have to worry about money. But you can do it in a year. It really does not take that long. And so it's interesting that you chose, it's obviously California, the average home price upwards of $600,000 is really difficult to get into. So it's interesting that you went all the way into the Midwest to get started. Why did you choose Missouri as your first acquisition?
Yeah, so it's happened to be the coach and mentor that I was working with was buying in this small town. And coincidentally, when I had been doing a work rotation in Missouri, I had called on the hospital in the small town, St. Joseph. And I had to pick my job off the ground when my mentor told me, you can buy a house there for $25,000.
Crazy.
Now it's an old house. Yeah. And it needed $20,000 of rehab. So I'll preface it that, but you can't even buy a parking spot here.
Yeah.
And it was a very reasonable amount. I bought it wholesale, so all cash, but it was enough that I felt comfortable. Like if I lost everything, it's a nice chunk of change, but it wasn't going to put us out on the streets.
Right.
Right. And so when he said that, I said, sign me up. And he walked me through the steps of finding a trustworthy team on the ground, which is how I was able to go ahead and feel confident buying sight unseen.
Yeah. Having boots on the ground, somebody that you can trust in the area, really does, reduce the anxiety when you're buying in a different area. It's really difficult to find good contractors, I've found. If you're in a different area, finding somebody that you can actually trust to get the job done, to not waste the money, to not steal your money is difficult. Sounds like you kind of skirted that because you had somebody already in that area that you trusted.
Yes, but I've gone into multiple different markets, and that is, probably the biggest question all of us try and wrap our head around doing this is a reliable contractor. And I think one of my biggest lessons learned, I've gotten, burned and probably will in the future, but hopefully, it's less and less because I'm learning how to mitigate that. Right. And the biggest thing is I think finding recommendations from your team. And, that's one of the biggest things is building a team that you can depend on in each market. And I always like to start with a rock star real estate agent and build it from there. And so hopefully they have a contractor recommendation. The contracts you put in place always have everything in writing and never, ever, ever pay up front. It's after work is completed. Right. Yeah. And so there's ways to do it, and then my other thing was I started and I continued to really just do cosmetic burrs and rehabs, right? So it's a little bit easier to manage, less money flow and things to be checking on. And then just having that system of somebody else on the ground, double checking before money exchanges hands.
Yeah. Yeah. I like, paying afterwards. We've done a few times. Well, when I first got started, I would pay at the beginning because that's what they want. And I didn't know any better. And I was like, okay.
Yeah.
They did the work, but sometimes they'll do the work and it's just a poor job. And at that point, you really don't have any leverage. You can't
Yeah.
You can't say, go fix this because you've already paid them.
I'm sorry. Hold on one second. Come on. We have, I'm so sorry. We are rehoming a puppy and apparently she doesn't bark until I'm in the middle of something. I'm so sorry, Gabe.
It's puppies, man. It happens. We
understand.
Okay. So, in the Midwest, that's where you bought your first one in Missouri. Did you continue buying in Missouri, or 72 units? I'm sure you had quite an arc there. How did the expansion begin?
Yeah, so the first couple that I bought after that were in Missouri. I started to do some more in St. Joe because I think it's nice once you have a team to continue around in that area. But after that, then I started to expand. My next place that I jumped into was Murray, Kentucky, of all places. And that was because I found an 8-plex that somebody was selling on Facebook Marketplace late one night.
All places, right?
Exactly, of all places. So I kind of did it backwards. I found the place and then I built my team. And then I bought a couple other places there as well. But I'm in Colorado, North Carolina, Mississippi. And for me, I mentioned a little bit at the start, finding that rockstar real estate agent, as long as I can find them, I've been able to successfully go into markets. There was a market, Omaha, Nebraska, that I really wanted to go into. And I couldn't find someone who wanted to work with me doing, off-market deals, who would call me back after going and looking at places. And so I just didn't go into that market. If I couldn't find my key player, it just wasn't going to work for me.
Yeah. Yeah. And it's especially for flips, I feel like it's really useful to start with that agent because they really know, what the good areas are. If you buy this crappy house, is it going to ARV at a number that makes sense for you? So yeah, I like that strategy. When it sounds like you've gone, across the board, you've mentioned a number of metros. Is there something that you look for when you choose a new metro, or are you doing it because of recommendations? Why do you choose to move metros when you do?
Yeah. So when I first started, I had this spreadsheet of all these different KPIs, right? And I think for those of us that are very type A and it's a lot of, equations and running your numbers, right? And I was trying to do the same on the market. And the first thing I'll say is there's no perfect market, right? There might be a bad deal, there might be a bad area, but there's no perfect market. But I try and do a mix.
Markets, though, I will say that there's definitely markets that you should not be investing in.
You know what? I think you can. It depends on your strategy, right? Different areas of every city is probably, and what you're going for depends, right? I don't know. If you have a market you would say, absolutely warn everybody off of. I'd love to hear.
Yeah, it's just I've invested in areas where I didn't factor property crime in enough, and especially when it comes. So we invest in self-storage facilities, and self-storage has a problem with property crime. People go in there. I bought one facility, and literally I fixed it. I'd done everything. I had, ready for the flip. I had more than doubled the value of the property. We had it under contract. It was going to close the week before the closing date. Some group went out there, destroyed every single door, and we lost. I ended up selling the property for a little bit of a profit, but nowhere near what I was going to make. And so now I'm very wary of markets that have a high property crime index. And there's different areas where it could be good in each market, but that's something. But anyways, keep going.
Well, and I was going to say that's a great point, because I was going to say I have my sheet that has the 5 KPIs, and the last column I can see it is the crime index. So, I look at median home value, and I do a change over time, so over the last 10 years, the change in the median home value, change in income, crime. I've also started to add climate change factors is one of the newest thing. So, starting to shift from maybe where I was buying a couple of years ago. So using that quant data, but then also the qualitative data, right? Like I work with students and I say, well, where would you want to travel if you have to go? I love having a place in Colorado because every time I go home to see my family, I can write it off because I have a rental there. Where might your best friend from high school that will be down the street that's maybe willing to go ahead and check on the house that will bring you some comfort. So it's been a little bit of that for me. Where have I known people in my mastermind groups that they're having success, as well as looking at those key KPI datas and seeing kind of where things look good at that moment.
Yeah. So you mentioned you have 5 KPI that you look at. I think you mentioned crime was one of them, and then the net change in, what was it, population?
Median home value. So median home value, median income, job growth, and population growth.
Makes sense.
So I do a change over the last couple of decades, and I have some, certain sites that I go to. So
cool. Yeah, those are all, those are the KPI that we all like to look at. So it makes sense. So you started out, you're in Missouri, and you mentioned some others that are really low purchase, initial purchase price metros. You mentioned you bought your first one for $20-something thousand cash. Have you ventured into metros where you really, it makes more sense to finance the deal, or are you're focusing on areas where you can buy in cash?
Oh yeah, no, 100%. At this point, we're all financed. I have a great lender. One of the key things is the second you max your 10 Fannie Freddie, or 20 if you have a partner you can do under each name. Find a local credit union or local bank, and I have a great one that actually lends in all 50 states. So we have portfolio loans with them, individual loans. So I've only done wholesale and paid cash twice, that first time, and then one other time after that. Because we have properties that are over $1 million, as well as, those that are $40,000, $50,000, $60,000.
Yeah. Makes sense. And you're split between long-term and short-term. Do you have a preference of the two?
Yeah. It's funny because long-term is never the sexy thing, right? You always hear about multifamily or short-term rentals, but long-term has really been my sweet spot. And the other thing is, things change, and lots of things have changed. And the reason we're starting to pivot away even more from short-term rentals is because cities are changing overnight. Things are becoming saturated, right? And so we've had to pivot some of our short-term rentals when they couldn't be short-term rentals anymore. And with single-family homes, we can do things like midterm. We've turned some into sober living group homes. They're easier to spin off, just to sell as residential. So I think it's a really great, flexible asset. And you can move fast. Sometimes it can take a long time to find a multifamily deal and get in there. And I like to go. I like to have momentum. I like to have success to keep me motivated.
Yeah. Yeah. Especially with single family, there are multiple different strategies that you can use. Single family or short term being one of them. But I like that idea where you underwrite the deal, make sure it works with long term, and if it works with long term, you can add any other strategy on top of that. If that strategy doesn't work out, at least you got the long term to fall back on. And houses, they're always there's always demand for a house. Doesn't matter what you're doing. People want a place to live. And so if you got a house, there is somebody out there that would be willing to buy it.
Exactly. Your job is just to make sure it's clean and safe, and they can live in it, and you really shouldn't have a problem in the long term over time keeping it full.
Yep. So let's talk about management. It's fun to go out there, look at properties, run the numbers, but once you buy it, having good management team is a very difficult process. Do you guys do it in-house? Do you work with property managers? What's the strategy there?
Yeah, so it's actually a bit of a blend. So some of the homes that my husband and I own personally, we self-manage. We use Rent Ready. The first thing we do is when we buy a house, we put on, a door code keypad, so we can have people looking at showing, seeing it in and out. In places like St. Joseph, where I first started off, where it is a lower price point, and so you're probably having more hands-on tenants, we'll say. I do work with a property management company there. I always write my numbers to have property management regardless, just in case. But for the short-term rentals, we actually ended up starting our own management company called Wanderlust Stays. So we have a team. My brother's actually our COO. He runs it out of Mexico City, and we do all of that. And also, his wife it works for the United Nations, so they're down there. And that's the great thing about real estate. You can do it anywhere, Santa Rosa or Mexico City. And then we have a great team of virtual assistants. And that was probably the changing point that really let me stop and start to think strategically instead of just in the grind, is taking the leap of faith and investing in a great team and full-time VAs.
Yeah. On that note, VAs have been like they've been a great fuel to my business, but sometimes it's very difficult, especially when you're working with international VAs. When you hire VAs, what is the strategy you use to get a good one? And do you hire VAs that are in the US, or do you go outside of the US?
Great question, because I probably went through the same pain points that you did, where, I tried to go super cheap at first, and I could only talk to them through Skype and certain hours, and you just can't communicate certain things and, in writing, and it takes a lot of time. And then, so I went through, a company where they were in the Philippines, but the company really had their hands on it and everything. And I, couldn't give them days off. And it was just, had to commit to a year long. And there's nothing more painful, right, than bringing on a VA, having them trained, and then they bounce, right? And I found that happen when I tried to go onto Fiverr and hire them myself directly.
Oh, yeah.
Right. Yeah. Yeah. And so thankfully we ended up with one amazing VA through the company that we had. She was with us for a year, and then we brought her on directly. And because of those pain points, what we've now done is we actually help people source VAs from her network, because she is reliable and amazing. And so we've got about 5 or 6 of her friends and acquaintances that she's personally gone through the hiring process of, placed with internally with us, as well as with friends and family. And we also, understanding that we as investors don't always have time to stop and retrain, because we have her and it's people she knows, she can fill in if we haven't had anybody leave yet. All our VAs that we've placed are all still there, but we cover for 2 weeks to a month while we transition and help, because to your point, it's already a lot of work to just get someone going, and then having that constant. So we found by sourcing from our network has been really amazing. And there are some really smart, driven, independent people over there. To your one point though, I did hire for my accounting and bookkeeping, a US based virtual assistant. Yeah,
that makes sense, because that is, especially when it comes to taxes, it can be specific to the U.S. So it makes more sense to have somebody, on our soil. But yeah, that's great. Once you find one good VA, you kind of use her network to kind of expand a little bit beyond that. It is difficult to find that first one, but once you get them, just hold on tight, treat them well, because they are worth their weight in gold for sure.
Exactly. Just have your expectations. You can use tools like Screenshot Monitor, that'll kind of document what they're doing and build that trust.
All right. So we are running down the clock, but before we move on, I want to talk about the future for you guys. What does the next 5-10 years look for you? What is the strategy that you're going for? What's your goals?
Yeah. So about 2 years ago now, I started a company called G6 Capital that is a syndication company. We first were doing funds raising and purchasing short-term rentals. We've pivoted away, and now we're doing just purely long-term rentals. And so we're getting ready to do another fundraise here shortly and get started, and that focuses on the Midwest. I also mentioned that we've had to pivot, and I've found myself in the last 5-6 months opening 8 sober living homes throughout the U.S., which has been quite an undertaking. I don't recommend opening multiple at the same time. If I could go back and do this again, it is definitely very labor and love intensive, but it's a really great way to give back and support the community. And I think a lot of us sometimes get a lot of grunt behavior. We get beat up a lot sometimes as landlords, right? And so it's nice to be able to say, look at what we're doing for people in need for the community. So hopefully when I talk in 5-10 years, those are up and going and have expanded and made an impact. But those are the focuses for us right now.
Very cool. With sober living houses, is there anything specific that you need to do to the house itself, or is it just a regular long-term rental that you use in a different way?
Yeah, nope. So it's a long-term rental. You just need to have the right amount of refrigerator space. So sometimes extra refrigerators, depending on how many people, extra washer and dryer. Sometimes, depending on if you're going to work with a certain charity, they'll have certain requirements in terms of parking and everything. But it's just, that's really kind of the great thing about sober living homes is you just need it to be safe, have the right smoke detectors and everything is the main thing that they check on, and enough beds for everybody.
Yeah, makes sense. All right, I'm going to take that opportunity to move us on to the quick question round. Are you ready?
Yes.
Let's do it. It starts with books or any form of education, Netflix show, YouTube channel, whatever. I just need 2 recommendations, one for general life wisdom, one for real estate.
Yep. So general life wisdom, Psychology of Money. I think it has an absolute great quote in there. And for a lot of us, we get going, right? And it's easy to compare and forget the successes that we've made. And the great quote is one of the hardest skills to learn in life is to stop moving the goalpost. And that was really impacted me because, if you had told me 3 years ago when I would get started that I was going to have 5 doors, I would have said, no way, that's crazy. And here I am beating myself up for only having, under 100. Yeah. And, you have to remember what you've accomplished. And I think it just overall really helps you kind of understand and dig into maybe why we always feel like that. So that was a great kind of just life and mindset changer for me. For real estate, I've got to say, Rich Dad, Poor Dad is always the one that we're going to fall back and change on. But the one thing is going to be, because it's so easy in real estate to get distracted by shiny penny. I'm going to do STR. Oh no, I'm going to do short-term rentals. So I think, if you haven't read Rich Dad, Poor Dad, obviously start there, but then the one thing and just keep that mindset as you're getting started in your journey.
Nice. I just pulled up The Psychology of Money on Amazon. It looks like a good book. I like that quote that you mentioned because it is very, very difficult to appreciate progress, especially when you have this, lofty goal, you want to reach it, you want to be there right now. It's difficult to realize like you've done a lot in the past couple of years. You've made a lot of progress, and to really sit there and appreciate it, because that is what's going to bring you happiness, is that gratitude. So good recommendation. That moves us on to the next question. This is for your younger self. So let's go back to the Lindsay who was still working in corporate, still calling up those cancer centers. Go back to her, look her in the eye, give her one piece of advice moving forward.
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
Make your money work for you. And risk can be calculated. I grew up straight A student, all of this, worked in finance, but yet I never thought I was the type who could invest and make money. All the private equity guys around me were. And it doesn't take a rocket science. I'm no different than all of your listeners. So have that faith and understand real estate is forgiving. So dive in.
There you go. I like it. All right. Next question is about the U.S. It is a big place. There's a lot of opportunity. Give me the metro you're most excited about investing in today.
Kansas City, Missouri. They're starting to call it the Silicon Prairie, or it's been called the Silicon Prairie. They just built a new women's soccer stadium there. Come on, Taylor Swift and Travis. I liked it before then, but they've got a great sports scene. And it's the kind of the destination for people in the Midwest for vacationing and business. And it's still, knock on wood, reasonable price.
Nice. I've heard a lot about Kansas City. I've never been out there, but I'm sure there's, if T Swift is out there, then it's got to be a good metro.
Right.
All right. Next question is about your business. The first three positions we hire form the foundation of how our business grows. What were they for you? And would you do it in a different order if you did it again today?
Yes, I totally agree with that. And no, I wouldn't do it in any different order. I started off partnering with somebody that was my real estate agent. And in a way, kind of brought him on, and he became my first employee. And I think finding someone that you trust and can relate with, but don't have a personal relationship with beforehand, like family, is very important. And then after that, I built bringing on she does our ops and our accounting through recommendations. So again, the beauty of our community is that people are so willing to share resources, except maybe a great contractor. That's the one thing that people might hold tight. But I hired by references. So the accountant, and then the third person was my virtual assistant. And I think that was really the right way to build the team.
Nice. Yep. All right. Next question is about finding deals. It all starts with generating leads, getting in contact with the seller, writing up that purchase agreement. So what is your favorite way to generate leads and find good deals?
So one of the things when you first get started is I was going on every Facebook page of areas that I was interested in, seeing who the wholesalers were, and just reaching out and saying, hey, can I get on your mailing list? Right. And so I still get more text messages from markets I never even went into, but I think that's a great way to start getting networked in and finding those deals and just practicing running your numbers. After that, and I know people will think I'm crazy, but especially right now, there are deals to be found on the MLS. It takes some time, but if you're willing to dig through it and run your numbers and know what you're looking for, they're out there.
There's also some pretty cool tools that will run numbers for you based on properties on the MLS. got like a lifetime subscription. I honestly don't remember the website, but it was pretty cool because it looked at MLS and then it ran numbers automatically.
Really?
Through which ones were good deals.
I'd love to know what that is
anymore. Yeah.
Yeah.
But yeah, dang it. I wish I forgot which one it was, but anyways,
yeah.
Yes, there are great deals on the MLS. Good recommendation. All right, next question is about biggest lessons learned. Not every deal that we get into goes the way we expect. Sometimes a wrench is thrown in there, and we got to kind of pivot. So what was the deal that went a little sideways, and what was the lesson that you pulled from it?
Yep. So the deal that went a little sideways was probably the biggest renovation that we took on, renovating a big house down on the coast in Mississippi for short-term rental. And even though we added in time, I think we had the need to start making money at a certain deadline. And we said, okay, we can give ourselves, we'll be done by then. But having that like drop dead date for it needing and to hit summertime was probably a big mistake when you're taking on a long distance major renovation. The other was not having more detailed written contract and communication with the contractor. And we hired a GC and they paid the contractor beforehand. And we all know what that can, lead to. So just because you have a GC managing your contractors doesn't mean that you don't need to manage the general contractor. So I think just being very thoughtful and systematic in how you do big rehabs, and always factor in more extra time than you think you need.
Very good lessons. Difficult ones to implement, especially the time thing, because it's always true. It never goes to plan. So you always got to give a little bit more, especially even for me, it's like due diligence periods. There's so many reports that I like to do, and sometimes it goes a little bit longer, and I just need to always ask about that at the beginning, give myself an extra week because that week is probably going to be needed. So in there, bake that time in there, give yourself some more time to allow things to go wrong. All right, that leads us to the second to last question. This is about your strengths. We're all gifted with gifts that we uniquely provide this world. So what is your superwoman strength?
My superwoman strength is finishing things. I think sometimes we get so started on something and I don't know how to not complete. And we can get in an analysis paralysis. And I think being able to make sure that I get past that point is what has helped me get to where I am today.
Yeah. That you're the first person to say that, that unique strength. And I feel like it's very important in real estate because it's easy to get started for me, especially like I can get something going instantly. But pushing it across the finish line takes a little bit more, more focus. Especially when there's so many opportunities out there and you just want to do them all. You really gotta do something, get it started, and then just push it until it finally crosses that finish line.
100%.
All right, last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out. What is the best way for them to do that?
Yeah, so go ahead, grab time on my calendar. You can go to the link millionairesmarchfreestrategysession.com. Grab 30 minutes. Let's connect, see how I can help, point you in the right direction, answer any, questions that come out of listening to this episode. But I really just love being able to connect with people and help in any way. So Millionaires March free strategy session. I know it's long, but you can find me there.
Cool. And so your website is themillionairesmarch.com, correct?
Correct.
Okay, cool. I will put that link in the show notes. If y'all want to reach out, just click a little more in the description. It'll pull down the full description, and there you can find Lindsay's link.
Wonderful.
All right, Lindsay. Yeah, that wraps it up. Thank you very much for hopping on the show.
Appreciate it, Gabe. Thank you very, very much for having me.
Yeah, absolutely. Everybody is here with us today. Thank you guys for showing up. You are the reason we do this. So if you guys have any questions whatsoever, reach out to me, Gabe at therealestateinvestingclub.com. If you guys want to support the show, just give us a like, subscribe, share, all that jazz. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode.
All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.